and welcome to Finextra. I'm Emily Horler and I'm here with Tim France-Massey of Barclays Wealth. Thank you very much for joining me.
Thank you for inviting me, Emily.
How is the rise of digital influencing what high net worth clients are demanding from wealth and investment advisors?
Well, with the rise of digital, high net worth clients are becoming more and more tech savvy. More and more of them are becoming digitally native. And although the relationship that they have with their financial advisor is still one of the primary criteria by which they select their wealth manager, and obviously the performance of the investment management that they provide and the fees that we charge are all key criteria. Digital is now probably the fourth most important criteria when they're selecting who their wealth manager is going to be. And the reason for that is because they want more and more transparency over the performance of their investment. They want to see whether they're getting value for money from for the fees that they're paying us to manage their investments. And they also want to be able to validate whether the investment advice that we're providing matches with the broader market. They're checking with sources on social media. About a third of all high net worth individuals follow financial service blogs so that they can compare the advice we're providing. So that's one thing, the transparency and the information, but also they expect us to deliver better value for money.
So what are the challenges private banks face when it comes to implementing digital channels?
Well, I'd say one of the biggest challenges is to do with adoption, because of the typical demographic of high net worth clients, private bank clients, is that they tend to be of the baby boomer generation, the older demographic. Now, although we have many silver surfers who are technically savvy, we also have a very big cohort of clients who are less comfortable using the internet. They're distrustful of the security of the internet, and so one of the biggest challenges is overcoming their concerns about using digital banking, digital investment management services. So conversely, we also have the challenge that the private bankers historically have had a very close personal relationship with their clients, and also had to be convinced that digital channels were going to help them to deepen the relationship with their clients, and for them to then become evangelists to their clients to adopt digital channel technology. So the way in which we've done that at Barclays Wealth, is that we launched the Digital Eagles initiative, which we've also spread to our wealth organisation. So now we have within our colleague community what we call our Digital Eagles, who will help our clients get comfortable with how to use our online banking and our mobile banking services.
How can investment in digital help banks meet other critical requirements such as regulatory compliance?
So in the wealth management industry, we're very heavily regulated by things like the Markets in Financial Instruments Directive, which means that we have to evidence that we've provided suitable investment advice. So one of the ways in which digital and digitisation can help us to remain compliant is by providing that audit trail, which shows that we've understood the attitude to risk of our clients, that we've understood their holistic investments that they hold with us and with other organisations, and that we've then provided them investment advice that is consistent with their attitude to risk and takes into consideration the assets that they already hold in the various asset classes. So that's probably one of the biggest areas where digitisation can help us to meet those requirements.
Tim, that's great. Thank you very much.
Thanks very much, Emily.
And thank you for watching.